The plastic revolution, the $7 trillion history of your credit card. What's in your wallet? Seriously, take it out. That little piece of plastic, or maybe it's titanium, isn't just a payment tool. It's a key to the modern economy, a snapshot of your financial life, and the product of a revolution that started over 70 years ago. Hello everyone, and welcome to Retro Insights. Today we're diving deep into the incredible history of the credit card in the United States. We'll cover its accidental invention, how it built a $70 trillion market, the benefits and brutal pitfalls for users, and how to choose the best card for you. Stick around, because by the end of this video, you'll never look at your card the same way again. The birth of an accidental revolution is quite interesting. The story begins not in a boardroom but at a restaurant in New York City in 1949. A man named Frank McNamara was having a business dinner and realized he'd forgotten his wallet. After the embarrassment, he had a brilliant idea. What if there was a card you could use to pay at multiple establishments? In 1950, he launched the Diners Club card. It wasn't a credit card as we know it today. It was a charge card. You had to pay the entire bill at the end of the month. But it was the first universal payment card, and it was a hit with traveling businessmen. It was an innovation that was to later transform and disrupt the way of doing business globally. But the real revolution came from a bank. In 1958, Bank of America dropped the BankAmericard, which is regarded as the first true revolving credit card on the unsuspecting residents of Fresno, California. They mailed out 60,000 activated cards to anyone with a pulse. This initiative is one of the biggest historical mass marketing campaign on record. This Fresno Drop was a calculated disaster. Fraud and defaults were sky high, but BOE proved the model could work at a massive scale. This set off a banking arms race. To compete, banks had to form alliances. This led to the creation of the associations we know today. BankAmericard became Visa in 1976, and a rival group of banks formed Mastercard, which became Mastercard in 1979. And let's not forget the other players. American Express, the king of travel and entertainment, leveraged its existing brand and its core competence. And in 1986, Discover entered the game with a disruptive idea: no annual fee and a cashback reward. The modern four-party system was born. So now, let's talk about why the system exploded. There was a significant growth in the credit card market because it offered incredible value, not just for banks, but for users and the entire economy. Number 1, convenience and safety. Obvious, right? But carrying a card is safer than cash, and the fraud protection is a huge benefit. If your card is stolen, you're typically liable for a maximum of $50, often $0. Driven by innovation from leading issuers and banks, card security is now far more robust, featuring real-time fraud monitoring, biometric authentication, and embedded EMV chips to protect every transaction. Try getting that protection with cash. Number 2, consumer credit. Credit cards democratized access to short-term loans. This fueled consumer spending, which now makes up about 70% of the US GDP. Number 3, rewards and perks. This is the fun part. The competition between issuers led to an arms race of benefits such as cashback, straightforward money back on purchases, travel points, for the frequent flyers, points that can be worth far more than cash back if used strategically, sign-up bonuses, sometimes worth over $1,000 in travel for meeting a minimum spend, purchase protections, extended warranties, rental car insurance, trip cancellation coverage. These are huge hidden benefits. Number 4, building credit. Your credit card is the most common tool for building your credit history, which is your financial reputation. A good score gets you lower rates on mortgages, auto loans, and even can affect your insurance premiums. But this power comes with immense responsibility. As an economic researcher, I can tell you the data on user mistakes is staggering. Here's what to avoid. Mistake number 1, carrying a balance and paying interest. This is the single biggest mistake you can make. The average annual percentage rate, the total yearly cost of borrowing money, which is expressed in percentage commonly known as APR, in 2025 is hovering around 24%. If you carry a $5,000 balance at that rate and make only minimum payments, it could take you over 20 years to pay it off, and you'd pay over $9,000 in interest. Treat your credit card like a debit card. Pay it off in full every month. Mistake number 2, hurting your credit utilization. This is the ratio of your balance to your credit limit. Using more than 30% of your limit can hurt your score. Maxing out your cards is a disaster. The system interprets it as you being over-reliant on debt. Mistake number 3, chasing rewards you can't afford. That sign-up bonus is a trap if it causes you to spend money you wouldn't have spent otherwise to hit the minimum spend. The math is simple. A $500 bonus is worthless if you go into $2,000 of debt to get it. Mistake number 4, ignoring the terms. That 0% intro APR expires. That annual fee might not be worth it if you don't use the benefits. Not reading your statements is a recipe for disaster with fees and interest. So how do you navigate this? Let's look at the key statistics and how you can choose the best card for your profile. Who are the major issuers of the credit cards? The market is dominated by a few giants: JP Chase, American Express, Citigroup, and Capital One. These are the banks that issue the cards, often on the Visa or Mastercard network. You might be curious, just how big is the credit card market? Let's break down the astonishing numbers. There are over 500 million credit card accounts in the US, with over $1.3 trillion in outstanding revolving debt. The growth in this market has resulted in intense rivalry and premium wars. Competition is now in the high-end premium card space. Cards like the Chase Sapphire Reserve, Amex Platinum, and Capital One Venture X are fighting for affluent customers with incredible lounges, credits, and perks. The biggest question is, how do you choose the best card? Here is a simple guidance that you can follow. Number 1, audit your spending. Where does your money go every month? Groceries, gas, travel, dining. Your card should match your highest spending categories. Number 2, check your credit. You need good to excellent credit, usually 670 plus, to qualify for the best rewards cards. Number 3, match the card to the goal. If you are a cashback user, get a simple 2% flat rate card on everything, like from Fidelity or SoFi, or a category card like the Amex Blue, cash preferred for 6% back on groceries. If you are a frequent traveler or a travel enthusiast, look at a travel card like the Chase Sapphire Preferred or the Capital One Venture. Their points are often worth more when redeemed for travel. Those who are big spenders and pays off the bills. Consider a premium card like the Amex Platinum if you can use the hundreds of dollars in annual credits for Uber, travel, and entertainment to offset its high annual fee. Remember, the devil is in the details. Read the fine print. Understand the annual fee, the APR, and the benefits. Don't get a travel card if you don't travel. It is a terrible mistake. Before we wrap up, let's hit some fascinating facts that highlight the scale of this system. The first universal card, which was known as the Diners Club card, started with only 200 members and was accepted by 27 restaurants. Every time you swipe, the merchant pays a fee of about 2 to 3%. This is how the networks such as the Visa, Mastercard, and banks make money. This generated over $150 billion in revenue for the industry in 2024. The future is digital, and cards are now digital. Apple Pay, Google Wallet, and BNPL, Buy Now, Pay Later, are the new frontiers. But they almost all still run on the same credit card networks built decades ago. Visa is an undisputed global leader in the credit card market, and the numbers are almost hard to comprehend. As of 2025, it was reported to have approximately 1.3 billion Visa credit cards circulating globally. The closest competitor was Mastercard with 1.1 billion cards. The United States is the world's largest credit card market. Visa and Mastercard dominate the transaction volume, but when you look at who actually issues the cards, that is the banks that give them to you, the leader is JP Chase. It holds a commanding 17% market share of outstanding credit card debts in the United States, with over $206 billion in receivables and 114 million cards issued. American Express, Citi, and Capital One are the next biggest issuers. What is fascinating is that American Express, while having fewer cards, it generates enormous purchase volume because its users spend significantly more per transaction, averaging $150 compared to Visa's $91. So what's the takeaway? The credit card is one of the most impactful financial innovations of the 20th century. It's a tool of incredible power. Used wisely, it can grant you safety, rewards, and access. Used poorly, it can create a debt trap that's incredibly hard to escape. Your job is to understand the history, respect the power, and make that tool work for you, not against you. If you found this deep dive into the history and economic of credit cards valuable, hit that like button and subscribe to Retro Insights for more content. Let me know in the comments what your #1 credit card tip is, or what you want us to explain next. Please remember, this video is for educational and information purposes only. Historical analysis is subject to ongoing debate and new discoveries. We strongly advise viewers to verify all information with independent authoritative sources. Thanks for watching Retro Insights, and we'll see you in the next video.